Good afternoon, all. Welcome to Bro Billionaire. This is Raghav here, bringing you another exciting learning video. Now, what are we going to learn today? Without wasting time, let's go ahead and start. Now, today we're going to learn something about follow line indicator. What do you mean by follow line indicator? Now, this follow line indicator is based on based on Bollinger Band. Now, if you know most of Bollinger Band, right? So the follow line indicator is this. If you go to Trading View, type in follow line, the first one. I just need follow line indicator. Okay, dread blitz, you can select this one. So I am not the author, somebody has created it. Now this follow line is based on Bollinger Band. If you don't know what is Bollinger Band, I'll just type in Bollinger Band. No, I'm not going to show you anything, just wait guys, right? I don't want this. Now we have Bollinger Band and you have follow line indicator. The central orange line is the 20 period simple moving average. This is the median of Bollinger Band. But when you use Bollinger Band alone, sometimes it works, yes, because it's a very famous indicator. When Bollinger Band is, sideways, it is sideways. But what I am trying to communicate here is this follow line indicator changes color. If it is blue, it is on the upper band of the Bollinger Band. This is the upper band. So it is towards upper side. When it is changes red, it is towards the lower end of the Bollinger Band. Now, what do you see? One major difference when you're using this. Do you see this is better than 20 period simple moving average? So if you remember, I have told you 20 period simple moving average has a lot of weightage, right? Now I'm going to remove Bollinger Band. Now with this 20 period moving average, if you get something better than 20 period simple moving average, where you can take trades with that much extra accuracy, it's fantastic, isn't it? Now that is where I'm coming from. Now I have plotted 200 period simple moving average. Now I have told you time and again, there is not much difference between exponential and simple moving averages. Both are lagging indicators, but they work the way because not because they are exponential or moving averages, because millions of traders across the world use them and make their trading decision based on them. That's the reason they work. Now trading is a probability. Hope you understand that every trade carries equal chance of win and lose. So if once you get matured, you will be able to understand each and every strategy like a in a much more clarity. Now I have color coded this, color coded in the sense whenever price is below 200 period, and the 200 period will turn red. And I have 150 period simple moving average. This is also color coded. If price is below that, it will turn red. And then we have follow line indicator. Now this follow line indicator, the assumption what we are doing here is whenever if you want to catch the explosive trend, it needs to happen when the follow line indicator is crossing the 200 period moving average. Majority of the times you are going to catch it. You have to take the trade with stop loss, otherwise you're going to miss. If you are taken here, maybe you got very less money. Here you got some money, but here you got 1:4 or 1:5 money. This is Bank Nifty 5 minutes time frame. Now, why do we need to use 50 period simple moving average? I have told you we need to use 50 period. The advantage of 50 period moving average is when the price is too far away from 200 MA, you can look for counter trade using the follow line indicator moving above 50, not below. The follow line indicator should go above 50. Same here. If it is a top, the follow line indicator should come below 50 to show the increase in momentum. Now, without wasting time, let's see how things work. Now, watch here. This is one trend, 250 period follow line. All are red, opening candle. What do you want to take a counter trade when everything is red? This is a very narrow range bound. Slowly going down, giving nothing. But if you start in the morning second candle, by close of business day, you would have 1:2 or 1:3. That is how the market works, right? But even in this toughest market, it will tell you. So whenever the follow line indicator is going down, it is a trend. When follow line indicator, see, if it stays flat, on it like a straight line. It is again a range bound. You can understand it in watching the line. The momentum is very less. Although it is on the lower side of the Bollinger Band, the flat line indicates momentum is very less. And one more thing, I'm not modifying any changes, anything in the follow line indicator. I want ATR filter. If you remove ATR filter, it will start giving whipsaws. I don't want, so use as it is, the default Bollinger Band period, Bollinger Band deviations, everything. Keep it as it is, right? The Bollinger Band period and the BB deviations, everything, you can increase it if you know how to increase it, but I don't suggest it. Use it in its purest form, whatever the settings there are. Now see here, this is 50 period, purple. The follow line indicator is above. Market opens below, it crashes to the 50 period. There you get a engulfing candle if you make it big, but a doji. Engulfing means outside reversal, doji. But since it is above the follow line, above the 50, you can take the trade keeping the stop loss below this. This is a range bound. Whatever indicator you follow, always make a habit of checking the left hand side, because it will give you that, okay, there is a support here, there's a resistance here. Now after that, you have a strong trend going upside. Similarly, follow line indicators turns red here, purple, the 50 period turns red, both the prices are below. Once the 200 SMA is broken, you can enter within next 15-20 minutes. You can go for scalping of 100-200 points. Where do you get the explosive moves? This is the explosive moves where you get in Bank Nifty. Yeah, this is at the top coming down. So if you understand price action, I have told several times, first 5 or 15 minutes break. If there is no resistance or support on the left hand side, always take the trade. High probability, more than 50% of the times it works, right? Now, anyway, if you're following the indicator, follow line indicator is blue, it comes below. This has turned red. Still price is above 50. See here, price tries to take support and breaks 50. Now you know here again around 200 MA, you have follow line indicator. This candle breaks 200 MA. If you are a little risky person, you will take near 50. But if you're a non-risky person, you will take near 50, and then you will follow the indicator to make 1:2. Minimum target should be 1:2. That is the best practice. What happened recently on Thursday? Same thing. See here. Price opens above doji, inside bar, after inside bar, one more doji, reversal wick, and then follow line indicators changes red here. This was an expiry, 50 MA red, 200 MA broken, boom. One of the biggest moves. See here, counter trend below 200 MA, but follow line indicator has crossed 50 MA. You have a trend going upside. So some of the easiest, when you keep the trading system easiest, this works. Now, what is the difference? Now, why have I removed 20 MA? Because I was trying to improvise the technique which I showed you. This is the 20 MA. Now, if you add 20 MA, says 20 MA is this blue line, right? This is the blue line. Or if I go here and increase, this is the 20 MA. What do you see in this 20 MA? The blue line is below the follow line indicator. So this is the follow line, this is the below. So when 20 MA is broken, most of the times you guys feel, okay, should I take the entry? Should I wait? If you're a new trader, but the follow line indicator psychologically will give you an idea that price is closer to this, your stop loss is here. So let me take the trade. 20 MA is here. What did I say? Bollinger Band, upper band. Upper band is always about 20. Lower band is always below 20. So you have it. So if you add 20 MA, there will be more clutter. So rather than, why do you need to use 20 MA when things are so simplified? You can just remove 20 MA because you know this is about 20 MA, this is below 20 MA. So you can just use the trend and the trading signal to take the trade. Now, some of the most explosive moves, as I showed you, right? You can keep watching. See, this is where I showed you this. This is below. Now below this, 50 MA is closer to 200 MA. Now you need to use your imagination. When the mean is so nearby, even if you get few points, why do you need to take the risk when trend is down? So rather than that, you will wait. Now this trend, I'm not talking about this reversal until unless you know this price action. This is a doji. This is a gravestone doji. This is called an evening star, right? They give different names. If you understand, this is one of the most powerful pattern where market can pull back. But this trade, yes, see below 20, snap, boom, market opened here last 30 minutes. You can capture these moves. If you are on the trend, okay, this is downtrend, you know, this is turning red below 50, boom. This move again, see, this is the price action, wick reversal. I'm not talking about this. We are talking about following the indicator. And if you're very disciplined person, if you understand discipline in trading, you know, you will always make money. See, this is uptrend, but very far away from the follow line. So some of you might have used Bollinger Band. What does it mean very far away from a follow line? This is outside the Bollinger Band, big gap up outside the Bollinger Band. Price has to come closer and then move in its direction or reverse. So this is 50 MA. The moment it changes red, you know, trend is down. If you take keeping the stop loss here, you will scalp some money. I would be more interested catching these kind of moves. Entire half a day sideway, but you know, about 200, above 50 follow line indicator turning blue, you get a explosive moves. I have shown this several times, right? Watch here again. Counter trend, it closes above 50, follow line indicator is here, goes take support on 20 SMA, boom. Hope this video is helpful. Tomorrow I'm going to bring you a very deadly combination of 5 EMA and pivots where you can scalp like a pro. Right now, this video should be sufficient enough for you to capture big moves. You can use 20 SMA if you're comfortable with it, but do not mix. So whatever video is, but this follow line indicator can also work on pivots. Yes, it works on pivots. See, this is the follow line indicator. This is the Cambrilla pivot, just showing you. See here, this is 20 SMA. This is follow line indicator. Why do I need to use 20 SMA when follow line indicator is there? You're understanding? But just a follow line indicator is enough. Price gaps up, coming down, it is turning red somewhere here below R4 or below R5, you know, trend is down. Now here near S3, near S3, it is because morning momentum, these candles are strong red bar, follow line indicator is in downtrend. Other than this price action, you don't have any moves. Somewhere here it turns blue where you can enter buying and you will have some money even in the very strong sideway market. The Cambrilla pivots, buying area. So if it is in between, you need to avoid this. But whenever prices comes near the pivot, watch the price action and you can follow the trend. Very simple. Breakout, follow the follow line, keep your bias only on the downside. See, this red bar would have turned this red. So you have this is below follow line. So this is closer to the Bollinger Band. Momentum is very strong. You don't need any indicator. Above this has already turned above upside Bollinger Band. So upside Bollinger Band, sudden turn of events can, you know, change, give you a scalping opportunity in a counter trade. See here, red. Even if it goes above, this is the first candle, it's going down. Now this is above S3, buy, R3 till R4. Now you can use this with floor pivots. Yes, definitely you can use this with floor pivots. Same thing. I plotted this 20 to show you, because if it is below, this is the strongest indicator than 20. It will have the, you know, built-in support and resistance wherever you have a range like a flag. So it helps you in a trend. This is basically a trend measuring indicator, right? So it will help you to follow the trend. You can follow this. Suppose if you're comfortable using both, it's up to you. but I wouldn't advise because it will add or it will make more complex. Rather than that, use this only based on the trading indicator. Go for scalping. You have pivots, the central pivot broke, you know, from here till here you have some money. Go for 1:1 or 1:2, make money. This is the previous day buying area, S1 support. Okay, you know this will act as a support, but if you're too afraid of, because candle opened here, the opening candle broke here, follow line indicator is blue, enter here, ride the wave until here, until it turns red, and you can exit 1:1, 1:2. See this one, opening candle. If it is a near 20, you will hesitate to take. But since the follow line indicator drops along with the opening, you can enter here, keeping the stop loss above this. You can capture this entire move, right? I'm keeping it very simple so that you can grasp the concepts and trade. Hopefully this video should help you in enhancing your trading knowledge. So try using it and use only this to make money, because as I said, in trading there are 100 strategies, but if you keep skipping the strategies, your memory will be rewritten, right? The whatever I showed on using these naked charts with 50, 200 and 20 MA, that memory should be rewritten with this without much complexity, because it is the same logic. If you follow our pivot strategies, I am not trying to complicate the strategies. Rather than that, I'm trying to integrate and complement the pivot so that the learning is easier and the probability of making money is higher. Thank you all guys. Have a good day. Have a great weekend.